Good day, everyone. Thank you for clicking on this video. My name is Michael. I'm from the South African Chamber of Commerce here in Singapore, and my profession is financial planning for South Africans in Singapore. And over the last 3 years, what I've been striving to do is to compact valuable information for South Africans in Singapore about finances, taxes, estate planning, everything into simple how-to guides to allow people to understand what they need to do once they've left South Africa and they have become international or global citizens. So someone who's been very instrumental in that and helping me a lot with that has been Marisca, who's one of our members of the chamber. So Marisca is a director of Mint Accounting, and that's an accounting firm down in Cape Town that specializes in immigration and non-resident tax advice. Marisca is also a qualified tax advisor, and she has a vast level of experience in working with South Africans all over the world. So, Marisca, thanks for giving me your time this afternoon. And if it's okay with you, I've got 4 questions for us just to jump into.
Yes, absolutely.
Sure. Right. So the very first question is, what are the steps required to withdraw your South African retirement funds in full?
Yeah, okay, so the steps are that someone would need to have been a non-resident for 3 consecutive years, and they have to actually inform SARS that their tax residency have ceased. So it's by doing a declaration of cease to be residents in South Africa. And there's lots of documents that need to go with this, but a very important document in this process is their tax residency certificate from the foreign country. And it's sometimes quite lengthy to get this document. So it's advisable that someone leading up to your 3 years of being a non-resident to apply for this document ahead of time.
Excellent. And for our South Africans out here in Singapore, it's really easy to get this document. You go onto the Singapore Inland Revenue Services website and you just search for Certificate of Residence. And from there, there's an Excel form you can download, complete yourself, and submit on your online tax portal. And they're actually quite fast. When I've done mine in the past for my previous years of assessment, I get it within 6 weeks. So definitely something worth doing and maintaining. Great, thanks, Marisca. So the second question is, so can you explain the changes that have come into play as of the 1st of March 2021 around the annuitization of Provident funds?
Yes, okay. So basically the changes around this is just to align it with a retirement annuity. And prior to the 1 March 2021, your Provident fund can be withdrawn in full at the age of 55. So on the 1st of March 2021, if someone was 55, that remains unchanged for them, and they can still withdraw the full Provident fund. Unless if after that date, they then decide to move their Provident fund to another fund. So let's say that they choose this at today's date, they move this to another Provident fund, then at today's date, whatever the value of that Provident fund is, will go into their vested account, and then, or this would be their vested benefit, and it goes into that account. And then whatever the accumulation and growth is after today's date will go into their second account, which is their non-vested account. And I'll explain the vested and non-vested just now as well. But that's basically for someone who was 55 already. So basically it remains unchanged for them. If at the 1st of March 2021, someone was below the age of 55, their investment just gets split in 2. So let's say investment account number 1 is their vested benefit. And what happens with this is also it remains unchanged. So whatever the value of their Provident fund at that date was, they can still withdraw this in full at the age of 55 or older. Now, the second investment account would be their non-vested benefit, and this is just whatever contributions or growth they have from the 1st of March 2021 onwards gets invested into that account, And then the difference really is that at the age of 55, they can't withdraw the full lump sum of that Provident fund. That gets then like the same rules as the retirement annuity. So the 1/3 lump sum can be withdrawn, and then the remaining 2/3 goes into a living annuity. And that is if the value is above 247,500, but if it's below that amount, they can still withdraw the full lump sum. So that's basically the changes that happens for that. And it only relates to retirement benefits, but there's also a withdrawal benefit when it comes to Provident Fund. And that is just that once in your lifetime, you get to withdraw from your Provident Fund before the age of 55, and that remains unchanged. So that's basically the changes that happened.
And I know it sounds like a mouthful to our audience, I'm sure, but it's actually really quite simple if you split it into, like you did, saying people before, so on the 1st of March 2021, they were 55 or older, and people who were not. And this is really going to affect people who are under the age of 55 quite a lot, in that basically they're going to have two parts, one being a vested amount and one being an unvested amount. The vested amount kind of retains the similar rights to what it had previously before these changes, and the non-vested has basically got the new rules applied to it. And basically, as you said, this is to align Provident funds with a similar treatment to that of a retirement annuity, just to simplify everything. Is that correct?
That's correct, yes.
Okay, brilliant. So I guess the next question is, have these changes affected the process that you outlined in question 1?
Of withdrawing your lump sum at immigration, which is no. If you immigrate, you can still withdraw your Provident Fund in full if you meet the requirements as well, or obviously if you haven't ever withdrawn a lump sum, then you can do that anyway.
Brilliant. And that brings us really nicely to the 4th question, which is something I get asked all the time, which is, as a non-resident who has immigrated, so you have your 3 consecutive years, you are non-resident, is there any difference in the levels of taxation when withdrawing my retirement funds before or after the age of 55? And I think if we can approach this question with saying, okay, retirement funds consist of pension and retirement annuity as one kind, and Provident funds as a separate kind.
Yes. So the first ones, which is the retirement annuity and the pension, is that, yes, that will be affected in the way that you withdraw it. So if you withdraw that on maturity, then it's taxed at the retirement benefit tables. And then if you do it at immigration, which most people will want to do because they want to withdraw that full lump sum. So in that case, then yes, they will pay a higher tax rate, which is the first 25,000 Rand will be tax free, and then the balance is taxed between 18 to 36%. Versus if you do this on maturity, then the first 500,000 Rand is tax free, and the balance is then taxed between 18 to 36%. So that would also be the tax bracket that someone will fall in if they have a Provident Fund, and they also immigrate and they are at the age of 55. So for them, they will still have that benefit if they have the vested part, so whatever they had at the 1st of March 2021, that part will not be subject to the higher tax rates.
It's very interesting, because the kind of questioning that we get around this is it worth taking the tax hit up front in order to have access to your funds immediately and get them offshore in a stronger currency and invested in said currency in perhaps a lower tax environment? And when making, taking this all into consideration and making these decisions, yes, at age 55, you can get taxed at withdrawal rates, but if you have a retirement annuity, if you have a pension fund, and the unvested portion of your Provident Fund, those will all be treated in a way that you can only take 1/3 of your capital in cash anyway. That would be taxed at the retirement rates. But the remaining 2/3 would be subject to a living annuity, which is basically an agreement with an insurance company that's contractual and legally binding that says, I'll give you X amount of money in order for you to give me this much income on an annual basis. That income is in rands. That income is still taxable at source. That income is the maximum you can take a year is 17.5% of your capital. So it comes with a lot of conditions. Whereas if you were to just simply take the hit up front and pull your funds offshore, you get more access, lower tax environment, and a stronger currency. So those are kind of the pros and cons to the benefits of it. When you go into the Provident funds, and let's say you are closer to the age of 55, it is perhaps beneficial to retain the funds until 55 because you can access it in full, the vested portion. And if your unvested portion is less than 247,500, you can take that out, and that's also taxed at retirement table rates. So there are some considerations, and the considerations mainly access, foreign exchange rate and the currency value thereof, your age, and the type of product that you have, retirement annuity, pension fund, or Provident fund.
Correct. Yeah. So it's definitely important just for people to get the right advice and make sure they're making the right decisions around their product, their age, what's going to happen in the future for them. So yeah, that's a really good summary.
Yeah, good. Thank you, Marisca. So if anyone wants to find you, to engage you on these topics and to perhaps get their tax affairs in order now that they've been offshore and they've left it for too long, how do they find you?
Okay, so there's various contact information that I can share. Is that for the members, it's great for them to email us at immigration, which is EMI, immigration@mintaccounting.co.za. And also we are on LinkedIn as Mint Accounting SA, and we are on Facebook, and also they can email me actually, but I think it's best just to email at immigration and I get contacted into that.
Sure. And also, if people want to find you on LinkedIn, it's Marisca de Brain, Mint Accounting. So guys, please do look for Marisca. If you're looking for financial planning advice and looking at your products in South Africa, as well as navigating what's offshore, please do feel free to get in touch with me. You can find me on LinkedIn. I'm Michael Booth, and there's a little South African flag next to my name, so I'm easy to find. And I'm happy to have a chat with you to see if there's any way that Marisca and I can help you to build your retirement plan efficiently. So Marisca, thanks very much for your time. I hope you have a lovely weekend.
You're welcome. Thank you. You too.